We're live.
Here we are.
We are another beautiful day in heaven.
Watermelon Wednesdays. Let's made that up.
Watermelon Wednesday? It's pretty good. I was going to say Hump Day Wednesday. Happy Wednesday to you guys. If you just joined us live, thank you for doing so. We always appreciate it. We do this stuff for you guys. My name is Tony Budry. Expertise in finance, lending, and credit. With me is my co-pilot, consumer rights attorney, Shiva Bhaskar. Thank you for joining us today. We really appreciate it. And as always, coming up to you with a relevant topic that we get from you guys. So, student loans, a huge thing for a lot of us, whether you've gone to a university, a junior college, a trade college, you have them, and they are this splinter in the mind that's always kind of lingering in the back. So today's topic is about student loans and the consequences of defaulting. Now, to give you a little bit of a background, student loan debt has mushroomed tremendously over the last several years. We're talking about arguably somewhere between 1.5 to 1.6 trillion. Trillion?
Yeah.
Trillion.
Yeah.
I don't know what a trillion is. I barely learned about a billion from a million. But a trillion, I really don't know how to quantify that. But I'm assuming that's what that, and that's just...
It's more than credit card or auto loan debt. I mean...
Wow. So
yeah.
it's a serious issue. And there's a reason. I mean, all of us, I've had student loans. I've had student loans default. I've had financial circumstances, where I couldn't take care of them. And I'm sure a lot of us have the same exact thing, So today's topic is about that. We want to show you guys constructive ways of being able to kind of keep your loans in shape, figure out intelligent ways to pay it back, and ultimately helping you guys avoid the consequence of just leaving them to defaulting. So we're going to be talking about that in details. So we'll start about the first thing that happens. Now, luckily, student loans have a special status, especially federal student loans, right? So if you default, it's not like a credit card, 30-day late and 60-day late. So we're going to pick up this from starting 9 months of default. Not 3, not 6. We're talking about 270 days into default, not making any payments when the payments are due. So we're going to be talking about what happens after the 9th month of not paying on your student loan. So the first thing that happens is that what we always talk about, they will report that to the credit bureaus, and that will send a shockwave of bad through your 3 credit scores. So that's the number one thing that will happen automatically. The second thing that will happen is that you will no longer be eligible for other federal student loans. Okay, if you are currently a student and you're going through school, maybe it was undergrad loans, and now you're trying to get your master's, but you have some of these loans in default. And if you want to continue having the privilege of getting more federal student loans, you really want to pay attention to this. Okay, that's another huge thing. And automatically after the 270th day, up on the 9th month of being in default, the loan becomes payable in full and due now. So you might have this jumbo size loan, maybe from as little as $15,000 to as much as $150,000, depending on where you went to school and for how long you went to school.
Yeah.
And after that, there is no repayment, no deferment, and you know what? Shiva is actually better suited than I am when it comes to these disparities and legal differences. Shiva, what happens?
Sure. So before you hit 9 months late, say you're having trouble making payments, you need a little bit of time, you could apply for and possibly be approved for what's called forbearance, where the loan continues to earn interest, but your payments are delayed for a little while, or maybe even you pay a really small reduced amount for a while. You might be eligible for deferment, where it doesn't earn interest. That's tougher to get, but it also helps you avoid immediate repayment while not earning too much interest on it. Or, just anything where you start repaying the loan. After 9 months, you cannot just go and ask for forbearance or ask for deferment to get out of this. 9 months of this, you're in trouble. The first month or second month you missed a payment, yeah, you could do that. Not after 9. Which brings us to the next thing. This can be turned over to a collection agency, or the existing company which holds it can continue collecting on it. They can take collections efforts. That has major consequences for you in terms of they'll be calling you, they'll be sending notices, they can get more aggressive. You do have rights, but yeah, they are allowed to collect on it. Now, wage garnishment. Money could be taken out of your paycheck without them ever going to court, because federal loans are in a special category. Usually you have to get sued And if someone were successfully sued you and won in court, and they went to the marshal or the police in your county, they could maybe seize money out of your paycheck. With federal student loans, once they've hit this status, they don't have to go to court or do any of that. They can come and automatically start taking the money. They can also freeze your bank account and get money out of it along those lines as well. Also, if you have a tax refund coming back, you'll have what's called an offset, where that tax money can be taken out by the government and used towards paying your loans. So there's a lot of really strong consequences. And one more, if you're applying for a new job, they do typically check your credit. If you're severely in default on a loan, you will probably have trouble getting that job. If you're applying for a professional license, like say you went to law school, medical school, you may not be admitted to the bar or residency in many states if you're in default on a student loan right now. They will not take you. So that kind of puts you in this catch-22 situation, right? You're in default, but it's hard to get out because of this. So student loan defaults are just terrible. You really don't want it, okay?
So what are my options after 9 months? What can I do?
There's one option, and it's actually quite good.
Sure.
It's called rehabilitation, okay? So what rehabilitation involves is, in a nutshell, the government is going to figure out how much you can afford to pay. You're going to make those payments for a period of time, out of which you're out of default. Let's dig in a little bit. And everything I'm telling you is in the article that we wrote for this, so we'll go into the details a little bit, but just read the article, read the examples, click the loan calculator to figure it out, okay? But first thing the government will do, look at your salary. Let's assume you're working. They'll take a look at your adjusted gross income. That's your salary before your taxes. It's that number you write at the top of the tax return from your W-2. It's that number, okay? They're going to look at another number, which is the federal poverty line. Basically, that says in your state, for a family of this size, let's say it's just you, not married, no kids, just you, what would be the poverty line? The line below which someone is living in poverty, okay? So let's say that you make $35,000 a year. And let's say the poverty line in your state for one person is $14,000 a year, okay? They'll take those two numbers. They'll multiply the lower number, the poverty line, by 1.5. So, okay? So they'll take it 21,000 in this case. Don't worry about the numbers. It's all in the article. Just to give you an idea, because people ask us this. So we want to give you the most detailed explanation. So,
Not pretty.
So basically, they'll subtract that amount, which is 1.5 times the poverty level. They will subtract that from your adjusted gross income. So like I said, you're making 30. 1.5 times poverty was 21. Your adjusted gross income is $9,000 now. Now, we're not done yet. That $9,000, they're going to take 15% of it, okay? 15% of 9,000 would be $1,350.
$1,350.
Yeah, $1,350. So $1,350. Now that number, I know we're almost done. Last step. And guys, there's a calculator in the article, so you don't have to do this in your head.
He does that in his head. I need I crunch him, so no worries.
So $1,350 divided by 12. So that comes out to about, I'd say about $112 or $112 a month. That's what you'll have to pay, okay? Now here's what you're going to do. For the next 10 months, 9 of those 10 months, you're going to pay that $112. And once you've done that for 9 of the next 10 months, each month you paid it on time, okay? That means you weren't 30 days late on it, you didn't miss a payment, not 9 of the 10 times. At that point, you're now out of default. You've completed rehabilitation. Now some really good things happen. The immediate late payments associated with the default will be removed from your credit report. So you won't be marked as 120 days late and so on. Now, this is important to remember.
Yeah.
Let's say before you defaulted, you were paying on time at one point. And before you were paying on time, let's say you defaulted in 2016. And then let's say between 2014 to 2016, you always paid on time.
Okay.
And before 2014, you had a few late payments.
I see.
Those late payments from 2014 may not be removed necessarily. Just the ones from when you actually defaulted will come off. You might be able to get them to remove the others, but that's more what we take care of. It's not usually done through them. Okay? Now that you've completed rehabilitation, you have a lot of options. You could go back into deferment. You could go back into forbearance. Everything around garnishing money from your paycheck, freezing your bank account, all of that will stop. One thing to remember, while you are in the rehabilitation process, it is possible for them to garnish money from your paycheck and all that. Yeah. They usually won't, as long as you're paying each time on time every month, but that's what it is. Now, here's the thing to remember. You can also consolidate the loan. You potentially could refinance it privately. I usually don't recommend that for people who had rehab because usually it means you had some financial problems and you want to stay away from a private loan because they can be more aggressive with collecting on it, as Tony has talked about. But you've got a lot of options at this point because you rehabilitated the loan. And this is a really important thing, guys. You only get one chance to rehabilitate the loan. What does that mean? If you rehabilitate the loan once, and then you go back and again go 9 months of default, there's no more chances. You're going to either have to come up with the money or be in garnishment forever potentially. That's the way it's going to be.
And hence, my French over here.
Yeah.
I mean, I'm not a fan of profanity or anything like that.
But in this case, it's that.
Yes, I really want to deliver home the point
Yeah.
here, And it's really, really important, you guys. You do not want it to kind of get aggravated and neglected till where it gets to this level, where you have to worry about, your paycheck being taken and, you're in collections, you're being hounded. So yeah, follow this advice. It's in your best interest to keep the privilege of having the federal loan protection. There's a lot of privileges like lower interest rates and the capacity to kind of,
over time.
Yeah. So these are really, really important things. So make sure that, 9 months is a very long time. You can do so much regardless of what the predicament is. I understand we can go through loss, whether it's family or whether it's work or spouse or whatever it might be. So just be mindful. We're here to help you guys. And as Shiva said, we'll have the article and
the one thing that Tony just touched upon, but I wanted to mention is, as he said, 9 months is a long time. If you run into a situation, you could always ask for forbearance or deferment.
Yes.
So 9 months means that in most cases, in my experience, people who ran into a challenging situation usually were able to get forbearance. I mean, a lot of people did during the financial crisis or when they lost a job. This 9 months is usually if you just didn't care or you haven't paid attention in all that time. Usually if you ask them, they're going to work with you to get on track. 9 months is where you ignored their calls for 9 months and let it go, and this is what happened. Outside of a major illness, in which case there's other exceptions, there's really no reason that if you're alive and well, you couldn't ask for forbearance or something else, and for 9 months it goes into default. It's really, we don't like to be judgmental, but what Tony said is true. You really have to let things go to let it get to this point.
Right.
And we really don't recommend it.
No.
I mean, not recommend it. We really advise against it.
Yes.
We have clients we're working with right now who went through it, and it has created a series of major complications around their credit and their finances. Because, for example, as Tony can tell you as a lender, if you have notations of garnishment appearing on loans, most mortgage lenders don't want to go near it.
Nope.
A lot of things like that. So you really gotta,
Not even VA loans.
Yeah. VA loans VA and FHA won't even touch it.
Nope.
So you're going to create really, really bad consequences for yourself. Auto loans at high rates. All those Chase Sapphire and those nice travel credit cards out the window.
Out the window.
So really, use your options. If you can't pay, get into deferment, get into forbearance. If you default, rehab it. And, as always, we're here to help. Give us a call, 424-350-1472, or shoot us an email at info@tier1credit.com. And if you found this useful, I'd also suggest clicking the video tabs on our Facebook page and look up an inch, down an inch. You'll find lots more videos on lots of credit topics. And as always, if you found it useful, once again, please like, comment, and follow us. I'm Shiva Bhaskar. This is Tony Budry. We're Tier 1 Credit. We'll see you soon.
Have a great Wednesday.